Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amended, the region's first and fastest-growing regulated all-in-one trading and investing app. Whether you're looking to invest in U.S. stocks like Apple or Tesla, or MENA giants like ETH or Selic, Amended puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amended do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amended offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amended app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and FinTech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and FinTech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbor. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and FinTech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbor. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the detail are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Welcome to the Deep Dive. We're your shortcut through the noise.
That's right.
Today, August 13th, 2025, we're diving into the crypto market. Got a whole stack of data expert takes.
Yeah, lots to unpack. We're looking at this recent crypto surge, what's happening with the big assets, leadership shifts, even some really cool innovations popping up.
And our mission, like always, is to pull out the key stuff for you. What's driving things, who's doing what.
Exactly. By the end, you should have a really solid picture, maybe even find a few surprises.
Okay, let's kick off with the big picture. The global market pulse, it's looking pretty positive, right? A big jump in prices, especially just in the last day or so.
Yeah, definitely positive. And what's interesting is how our source ties this uplift straight to the latest inflation numbers.
Ah, okay.
Inflation seems to be consistently trending down under the current administration, which kind of goes against some earlier talk about tariffs pushing prices up.
Right, I remember that.
So this downward trend, the source suggests, has really boosted investor confidence.
And you can see that confidence in the ETF numbers, can't you? The inflows are huge.
Absolutely massive. Well over the $500 billion mark. I think the number was $589 billion specifically.
Wow, $589 billion. That's serious capital flowing in.
It really is. Now, there's also this interesting note in our source about the Bureau of Labor Statistics data.
Oh.
Yeah, it mentions a claim, a suggestion really, that maybe some data manipulation occurred.
Okay.
But, and this is the fascinating part, the source says, even if that data was manipulated, it still seems to paint a positive picture for the current administration.
Huh, how so?
Well, it could potentially give them a reason for, say, economic relief in the job market, maybe influence monetary policy. Some analysts are even talking about a possible interest rate cut this month because of it.
That's quite a narrative. Interesting. So looking at the overall metrics then, the global cap.
Shattered $4 trillion. It's
Yeah.
sitting at $4.17 trillion now, up 2.7% in just 24 hours.
Impressive.
Yeah.
And the volume, does it back that up?
It does. Total crypto market volume is over $200 billion, and $219 billion in the last day. Our sources call that a healthy matrix.
Meaning real activity,
Yeah.
not just fluff.
Exactly. It suggests the price moves have substance behind them. And stablecoin volumes are strong, too. Tether USD at, $155.96 billion. Circles USDC at $20.94 billion. FDUSD at $10.17 billion. Lots of activity there.
And this growth isn't just general, right? Decentralized finance, DeFi seems to be having a moment. What's up with DXs?
Oh, it's a big one. Decentralized exchange volume, the peer-to-peer platforms crossed $20 billion. $20.72 billion. First time in a while we've seen that level.
Wow.
And the fees they collected, $93.45 million. So people are definitely using them.
But centralized exchanges still have the majority of volume, technically?
Technically, yes, 51.17%. But, and this is a key point from our sources, they reckon maybe 30, even 35% of that centralized volume could be, inflated, wash trading, that kind of thing.
Gotcha. So the real DX growth is maybe even more significant than it looks.
Could be, yeah. And linked to that, the total value locked, TVL connected to these Ethereum treasury firms we'll talk more about. That's at $156.74 billion. Just enormous.
Okay. And real-world assets, RWA, TVL.
It's slightly down, actually, $13.42 billion, but the main DXs are buzzing. Uniswap's leading, $8.59 billion volume.
Right.
Then you've got PancakeSwap, $1.89 billion, Fluid, $1.08 billion, Zero Drum, Radium, both in the high 100 millions. So lots of action across the board there.
Okay, let's shift gears to the big two. Bitcoin and Ethereum. Seeing a bit of a dominant shift, aren't we?
We are. Bitcoin's still king, 58.55% dominance. But Ethereum, it's up near 14%, 13.90%, which is unusually high.
And the sources point to Ethereum treasury hype. What's that about?
It's basically all this money flowing into companies that are just buying and holding massive amounts of Ether, treating ETH like a reserve asset.
Right.
And it's creating this strange situation where Ethereum's 24-hour trading volume, $63.3 billion, is almost 80% of Bitcoin's $74.78 billion.
Which is not normal.
Not at all. Historically, ETH volume is maybe half of Bitcoin's. So this signals a real focus shift towards Ethereum right now.
And the market cap reflects that too.
Absolutely. Ethereum's market cap is $562 billion. Just 2 months ago, it was below $300 billion. That's a huge jump. Bitcoin's still way ahead, of course, $2.37 trillion, but ETH is making serious moves.
Now, alongside these giants, our research mentions something called the Boys Club coins. What's that about? Sounds interesting.
It's definitely interesting. The source calls it a weird matrix. It's a group of coins with a combined market cap of $6.35 billion.
Okay.
But the distribution is just bizarre. Pepe leads with $5.19 billion of that total. Then Brad is next with $594 million.
Right, still substantial.
But then it just falls off a cliff. Anti-ETH is at like $91,000. Pepe coin, $66,000. Landv, $53,000. Tiny caps compared to the top two.
That is a weird disparity. And there's a warning attached to this, right? Especially for newcomers.
A strong one, yes. The sources suggest this whole trend might be fueled heavily by social media hype, trying to lure in newer, maybe less savvy investors.
Uh-oh, setting up for potential.
Potential rug pulls, yeah.
Yeah.
Where the developers just vanish with the money. It's a stark reminder, really. You absolutely have to do your own research, especially with coins like these that seem to pop up very quickly. DYOR.
Always good advice. Okay, let's pivot to some specific key events. Monero, the privacy coin, what Bitcoin intended to be, as some say. These claims of a 51% attack, what happened there?
Right, so this company, Qubic, claimed they briefly got control of over half of Monero's mining power, the hash rate.
Briefly?
Yeah, they called it an experiment to show vulnerabilities, supposedly to help improve security. They said they mined 63 out of 122 blocks in just a 4-hour period.
That sounds significant, especially for Monero, given the regulatory heat on privacy coins already. Dubai banned them outright, didn't they?
They did. So the threat argument is clear. If
Yeah.
someone controls 51%, they could potentially mess with transactions, double spend coins.
Did that happen?
Well, network explorers did show some small reorganizations, like reordering the last few blocks up to 6 blocks deep, but described as low impact. And even Monero folks admit the network's smaller security budget makes it a bit more vulnerable. We've seen attacks on Ethereum Classic, Bitcoin Gold in the past.
Okay, so there's some basis for concern, but there's a counter-argument, too, that this wasn't really a big deal.
Exactly. Other experts, AMLBot, Horizon Labs, and our sources too, are pushing back. They say there's no independent proof Qubic actually took over. No sign of big blockchain rewrites or confirmed double spends. They argue Qubic's data might be cherry-picked from a specific time window, not the whole picture. And the attack was super short, low impact, and the network itself, the consensus, stayed in control. Monero's own team hasn't confirmed any major breach.
So it caused a price dip for Monero, but the actual severity is debatable.
Very debatable.
Really?
It's murky. For anyone wanting the super technical version, the sources mentioned a YouTube series called Breaking Monero.
Good to know. Okay, moving from network security debates to big name influence, Peter Thiel. He's been making moves in the Ethereum space.
Big moves. He bought a 7.5% stake in a company called ETHZilla. Used to be a biotech firm, 180 life sciences, but it's pivoted to become an Ethereum treasury company.
Holding lots of ETH.
Exactly. And Thiel buying in sent ETHZilla's stock up. Wait for it. 207% in one day.
Whoa, okay. And Thiel, he's got history in crypto, right?
Oh, yeah. He's an OG.
Yeah.
An original. His founders fund actually gave Vitalik Buterin a $100,000 grant back in 2014 to work on Ethereum.
No kidding.
Yep. Plus, he's known to have close ties to the current administration, which fits with their sort of pro-crypto stance, like that recent executive order about 401ks potentially including crypto.
Interesting connections, and this wasn't his only ETH play recently.
Nope. He also grabbed a 9.1% stake in another company, Bitcom. They already hold $5 billion in ETH and want to raise another $20 billion to buy more.
$20 billion.
That's the plan. So this whole trend, these Ethereum treasury firms getting huge inflows, it's massively boosting Ethereum's total value locked.
Which brings us back to that bizarre matrix idea the source mentioned.
Exactly. The source finds it kind of strange that the cost of securing the network, locking up all this ETH, seems to be growing faster or becoming more valuable than the actual use of the network for transactions. It raises weird economic questions long term.
Yeah, you can see that point. Okay, shifting from finance figures to political ones, Donald Trump's digital asset initiatives, there's been a change in advisors.
Yeah, switch up. Bo Hines stepped down as executive director of the President's Council of Advisors on Digital Assets. Patrick Witt took over.
And they're both former Yale football players.
Apparently so. It's a relatively new but clearly important role within the administration, focused just on crypto and digital assets.
So what's Witt's job now?
His immediate task is to keep tabs on the Senate's version of that big crypto bill, the Digital Asset Market Clarity Act, that the House already passed. Needs to see what happens when Congress gets back from recess.
And Hines was working on?
He was monitoring the administration's Bitcoin Strategic Reserve, the one they launched earlier this year.
Got it. And separate from the advisory council, there's news about Trump Media, TMTG.
Right. They filed an amendment for their Truth Social Bitcoin ETF, ticker symbol BIIT.
Okay, another Bitcoin ETF. What's the structure?
It's going to hold Bitcoin directly, track the price. Crypto.com is lined up to be the custodian, handle the trading, provide liquidity. Plans are for it to list on NYSE Arca.
Any timeline.
The amendment apparently pushes back the effective date a bit. Seems they need to add more updates. But our sources think this whole thing could be good news for Crypto.com's own token, Kronos.
Makes sense. Now, linking politics and markets. Our sources seem to strongly believe geopolitical events move crypto prices.
Very strongly. They point specifically to the upcoming meeting between President Trump and President Putin on August 15th.
Just a couple of days away, what's the thinking there?
The speculation, purely from the source material, is that if the meeting goes well, positive news on world peace, that could really boost investor confidence across the board.
And that would lift crypto prices, like Bitcoin.
That's the theory. A rising tide of confidence lifts all boats, including digital assets. The source even suggests following Truth Social for updates on how that meeting unfolds.
Interesting times. Okay, so while all this global stuff is happening, specific regions are really pushing innovation. Dubai and the UAE seem to be key hubs.
Definitely emerging as major players.
Yeah.
Take Morphware, for example. They do sustainable AI and decentralized computing.
Right.
They've just expanded big time into Abu Dhabi, calling it the UAE's second global hub for their kind of network. Abu Dhabi's got the infrastructure, the friendly regulations, the tech investment. It's a big draw.
And their model is interesting, isn't it? Combining Bitcoin mining with AI.
Yeah, it's a hybrid approach. They use Bitcoin mining revenue. They run over 600 miners, apparently, to help fund their AI and machine learning services. They're using top-end NVIDIA GPUs, the H200s and B200s.
What about the sustainable part?
Big focus there. Their operations in Paraguay are 100% hydroelectric power, and in the UAE, they'll tap into advanced, efficient data centers and government green initiatives.
The security, especially with AI data,
They're using blockchain for security, including something called homomorphic encryption.
which means
You can compute on data while it stays encrypted. Huge for privacy, especially with sensitive AI datasets.
very cool. So their goal is to compete with the big cloud providers like AWS or Google Cloud.
Pretty much. Be a cost-effective, decentralized alternative, but with a major focus on energy efficiency and sustainability. They only started in 2021, but already in the US, Paraguay, and now the UAE, moving fast.
It seems like it. And another big area in the UAE is real-world asset tokenization, RWAs.
Absolutely. There's a new joint venture between Brikyland Technologies and Inovatic. It's called Brikyland Technologies UAE, and it's setting up under the Abu Dhabi global market rules. And their focus is tokenizing real-world stuff. Think fractional ownership of real estate, big infrastructure projects, maybe alternative assets like art or collectibles, making these things investable via tokens on a blockchain.
So breaking down large assets into smaller tradable pieces.
Precisely. The aim is to make Abu Dhabi a global leader in this. They're stressing security, transparency, innovation. It really fits the UAE's whole economic growth plan.
What are the key ingredients for making that work?
They're talking about combining global know-how with local markets and arts, attracting investors from everywhere, making investment easier through the tech, staying compliant with regulations, and building solid platforms. They're apparently already talking about specific assets for pilot projects.
Sounds promising. Is there more info coming on this?
Yeah, the source mentioned a LinkedIn live session planned for September, going deep into the history of RWA tokenization and the pros and cons of doing it on permission, like private blockchains versus open ones like Ethereum. Should be interesting for those who want to really get into the weeds.
Definitely one to watch. Okay, so wrapping things up. Quite a journey today. We've seen this crypto market showing surprising strength, possibly linked to inflation trends and big ETF inflows.
Yeah, and we dug into those tricky Monero attack claims, the difference between a real threat and maybe just an experiment.
Right. And the huge influence of figures like Peter Thiel basically reshaping the Ethereum investment landscape with these treasury firms, leading to that bizarre matrix question about network value versus utility.
We also touched on the Trump administration's moves, the new advisor, the ETF plans, and that interesting link our sources draw between geopolitics, like the upcoming Putin meeting, and potential crypto price action.
And finally, landed in the UAE, seeing real innovation hubs emerge with Morphware's sustainable AI computing and this big push into tokenizing real-world assets.
It really shows how interconnected everything is, doesn't it? Macroeconomics, politics, individual investors, tech breakthroughs. It's all feeding into this digital asset space.
It really is. So thinking about all these different threads, the economics, the tech, the politics, the personalities, for you listening, what do you think is the single most important factor that's going to shape crypto over the next year?
And maybe how do you see these different forces playing out as you navigate this space yourself? Lots to think about.